Hello and welcome to Profit Playbook. In this series of the Profit Playbook, we're looking at decisions businesses face day to day. As you know, accountancy is all about numbers. So today we're particularly looking at numbers and how they can affect your business decisions. I'm your host today, Tracey Metcalfe, and I'm joined by Susi French. So let's get started and look at the numbers in your business. Welcome, Susi. So many businesses just look at their figures at the year end. At Green & Co, we do recommend a boardroom meeting prior to the year end. Why is this really important to businesses?
There's nothing more frustrating when businesses, it doesn't actually even tend to be at the year end. It tends to be, 2, 3, 6 months after the year end when they've had their accounting records into us. We've turned them around, we've got draft accounts. We sit down with them for their draft accounts meeting. So there we are, several months after the year end. And there are things that we look at in the accounts and we think, if only we had chatted before the year end, we could have done something about this. But we're now way too late to do anything about it. We could have probably saved you some tax, more than a board review meeting would cost, and everything could be much easier. Whether it's somebody who suddenly thinks they could make a pension accrual in their accounts, which you can't do, pensions have to be on an actual basis in the accounts, or you've got, in my case where I deal with agricultural clients, a farmer who's already made 5 years of losses before this year. They needed to make a profit this year, and we could have actually had a look how they were getting on, whether we could move things around. And they've made another loss, and suddenly they're starting to fall foul of the hobby farming rules. So basically, by the time you've got to that meeting after the year end, there are quite a few things it's too late to do anything about. But yet we could have done something so easily if we were still in the year.
So having that management information as you go along.
Yeah.
All really about the numbers.
Important. Really important.
Many people just rely on their gut instinct thinking, it's going to be okay. Is that risky?
Very risky. If it's my business, I wouldn't want to rely on that. Yeah. Can you remember every transaction you did in the year? There are the things that you put in every day, day in, day out. You've bought some feed, you've paid for someone to service a machine, whatever business you're in. Those things you probably might remember. But have you thought about your stock valuations and the impact that they're going to have on your year-end figures? Have you thought about things that you might want to accrue into the accounts that you can? And have you thought of all those odds and ends that just around the year end the accountant goes, have you thought about? Maybe it would have been better to think about that much earlier on.
And thinking about figures as you look at them when you're going along, you hear about KPIs. Can you explain a little about what a KPI is so people don't understand it and how they can be used in business?
So a KPI, or in long form, key performance indicator. These are the things, the numbers or the indicator that you might calculate, the ones that really matter to your business. For a lot of businesses, it may be your gross margin is really important. And with your type of business, you would expect your gross margin to be consistent year in, year out. But actually, if you don't keep an eye on it, there are things that can creep in, extra costs, that you just don't notice because you're not keeping an eye on, and your gross margin starts to slip. Whereas if you keep checking on it, I don't know whether you check it monthly, quarterly, you can review what's going wrong, or in a good way, you could review what's going right. If things are getting better, but at least you're on top of it, you know what's going on. If you're in something where, you're a services industry, recovery rates may be really important, keeping an eye on that, or staff utilisations. Whatever your business you're in, there will be some key performance indicators that are just crucial to your business, and they will be tailored to each business based on what you want to do and how you run your business and the type of business you are.
And talking about businesses, there are businesses that have different income streams. So we did cover this in the first series of the Profit Playbook. What things can they look at when they have different income streams? Just gauge, obviously they must be gauging where one's making a profit.
Yeah. So it's like, is one income stream carrying another? So you may have a very profitable income stream and you may have one that's loss-making. But if you just, mush everything into one nominal ledger account as all income, you won't be able to pull that out and see where one income stream is going wrong. You also may have different risks for different income streams, and actually by pulling them apart and seeing how each one is doing, you can potentially address those risks in different ways.
This is where it's important to have that management accounts, so to review this regular,
yeah
rather than just obviously after year end or after the year end when it's a bit too late. Because it is important to know if one is making a loss, because you're carrying that loss otherwise, aren't you? So
Yeah. If you don't do management accounts, how do you know how you're doing? You're just, as you said, doing it on your gut. And gut is a really difficult thing because you may not have thought of everything. Some clients may also do things like, cash flow forecasts if they've got plans. Because they want to see if they're actually going to have enough money to see those plans to fruition, or are they going to run out of money? Because profit, although important, cash is also really important, because if you don't have cash or you don't have sufficient funds to do what you want to do, you could run out and never finish, or you could go bust. So, you may have to scale back what you're doing. So again, numbers really important.
yeah. And continuing about numbers, I mean, there's lots of software out there that people can use. How important is the software in making it more efficient, and even automating some of the processes?
So software is incredibly important. So for example, we have Xero. And obviously software is as good as the numbers you put in. So obviously you need to have good bookkeeping. But if you have good bookkeeping, you can pull out all sorts of reports, whether it's profit by month, whether it's management accounts, etc., etc. However, obviously it's always important to get somebody to look over those numbers to see whether they make sense. There's still always a human element. But it's really nice if, software can do the legwork for you and save you time.
Can you just give us one takeaway from today that people can just come back to?
I think element of don't hide your head in the sand. Actually making plans for your business, keeping an eye on what it's doing. Don't let it get out of control, and don't wait 6 months after the year end to be surprised about what's going on in it, when you can look at things within the year.
Numbers are key.
Yes.
Thanks, Susie, for coming along today. Some really valuable information in there, particularly like looking at your numbers, not waiting until the year end. Thanks ever so much, and I hope people get a lot out of that today.
Thank you.
So, thanks for joining us today at the Profit Playbook. I really hope you found it useful. If there's someone you'd like to share it with that might be useful to them, please do so. Just thanks for listening, and don't forget to like, share and subscribe, and we'll see you again next time.